Okay, so I wanted just to ask, since you guys are the owners, I was surprised. Wait, do you guys even get down with the nitty gritty and do all of these mortgage applications, or?
Yeah, man. So we absolutely we roll our sleeves up and we get our hands dirty. So one thing me and Aaron are still passionate about is providing the advice to clients. It's something that we just can't let go at all. Listen, our days are busy. You know, we've got a busy operation to run. We've got a huge team behind this, and there's always something to do. But something that we just love doing is still speaking with our clients. So we've got clients that we still provide advice to on a daily basis. Whether we let that go, that's a different question, and whether we'll stop the business growing, we don't know at all. But for the foreseeable, yeah, we're going to carry on. So yeah.
Train our team, so that's a big thing. So we know what the lenders, the criteria of lenders, because we're dealing with it every day. Yeah. So that's a great skill to pass on to the rest of the mortgage brokers. So yeah.
Yeah, no, that's really good. I guess, what would you say? Still, you guys deal with more complex cases, or even just a little 495?
We deal with everything.
We deal with everything, but literally the complex stuff is the stuff that we actually love still doing. So the harder, the better. Yeah. So we're different business owners. We're not your standard business owners.
Just a laid back.
We're not your shirt and tie sort of guys at all. We're pretty laid back, and we get amongst it.
Yeah, I just want to ask, final question. How many would you say you deal with maybe on a day, or cases going through, or maybe a week, or
as a business, we have over 3 figures per month.
Wow. Yeah, that's big.
Yeah.
We have
a large team.
Yeah, we've got 22 active brokers that work for Create Finance. We've got an administration team. So there's me, Gindy and Carl, who are the directors at Create as well. So we've got a big team, help a lot of people.
Wow, that's really big, man. That's good. Smooth.
Yeah,
my guys. What do you think about people trying to get a second residential mortgage? How should their finances be in place for that to go through?
So with a second residential, so if you've already got a mortgage in place, the only difficulty that you may have when you're getting a second residential is the affordability of that mortgage, because what the lender's going to do is they're going to look at what mortgage have you got in place already, and then what they'll then do is look at the affordability based on you then having another mortgage on top. So it's affordability. The other thing that's a big consideration with second properties is stamp duty. So when you're paying stamp duty when you've got an additional property, that's then at a higher rate. So you'll have a higher stamp duty tax to pay. So a lot of people don't consider that, but it can make a huge difference in terms of what you've got to pay back to the government.
Yeah, no, that definitely makes sense. What would you say? I know you guys aren't economists or anything, but do you guys have any forecasts for?
If there's any economists watching here, I'm sorry for what I'm about to say. But economists have got so much wrong in the last 10 years. Now, how many times have we opened up a newspaper or read a news article to say interest rates are going up, interest rates are going to remain low for the next 10 years? Gosh, stealing a living. Sorry, guys, economists. But it's hard to say. Really, when we hit the pandemic, we had a spike in interest rates, and people said, obviously, interest rates will then come down and remain low for a number of years. But at the moment, we're seeing interest rates increasing. It's hard to say. At the moment, the most common consensus is that rates will go up. I think the government has said that the base rate will go up to 2.5%. By the end of the year, and that's almost the forecast, and which will mean that obviously interest rates will increase accordingly as well. I wouldn't like to predict
of course
at all where the rates will be at all. What we're finding as a business on a day-to-day basis, our clients are opting, rather than the short-term fixed rates, they're opting for the longer-term fixed rates, i.e. 5 and 10 year. 10-year rates are the most popular they've ever been. But it all depends on everyone's individual circumstances.
That definitely makes sense.
Definitely.
Also, now there are some people watching that, they rather live with parents, but they want to invest and become a buy-to-let landlord, straight away. So for the first property, what do you lot think about someone trying to rent out straight away and what things you have in place for it to make sense for them?
Yeah, listen, I commend people who are looking to do that. That's really all good aspirational stuff. And lenders, if I'm honest, have adopted to that approach as well, because you might be comfortable living at home. That's absolutely fine with no intentions to move out. There's lenders that will consider you as a first-time buyer, first-time landlord, looking to rent out the property. I'd probably say it's most popular.
Yeah,
it's been ever. So there's the different facilities out there for that, whether you're buying personally or whether you're buying through a limited company.
Biggest thing that you need really is when you're looking at a buy-to-let is you need a bigger deposit than if you're looking at a residential property. So there are some residential mortgages that you can get with a 5% deposit. If you're looking at buy-to-lets, generally the absolute minimum that you do need is 20%. There is a couple of lenders that will do it with 15%, but you generally need 25% deposit. So I suppose that's the biggest challenge for your people that are living at home, is that's even more money that you've got to have been saving. But I think a good thing to do is to look at the geographical area that you're buying. So if you're buying in London, your house price is going to be so much higher than what it will be further up north in somewhere like Newcastle, where your property price might be significantly lower. So if you've got a smaller deposit, don't think that that's not right. You don't need to live in the geographical area that you're looking to rent out. So as long as the property can be managed, then look at all of the options and look a bit further afield. Just think a little bit outside the box. Don't think just look at properties in your area. Think, well, I've got this pot of money. What can I do to invest? If property is really important and you want to grow your portfolio and get more and more properties, then just think outside the box. Think, where can I buy?
Just do your research. Most definitely.
Yeah, definitely. And with buy-to-lets, right, what would you say the affordability tests are for those? Because I've noticed they rather look at, okay, what's the profit you can make type of thing. So how does that work for people looking to get into that?
It's more around the rental income the property generates rather than personal income. Now, some lenders will want you to have a element of personal income just to cover, obviously, rental voids if the property is empty, but it's majority around, they've got like a calculation that they work on around the rental income the property generates. So I tend to be quite generous, if I'm honest, as well.
So as long as that makes sense and it gives you a little bit of profit on top, and you know, it's
and that's another good thing, especially if you might not actually earn enough money to move into a residential property, but that shouldn't then stop you from getting on the property ladder. It's a great way. You might not have enough income to get a residential property, but because the lenders look at the rental income rather than your own income, that might mean that you can get on the property ladder. So it is a good way for people, as I say, just think outside the box, speak to a mortgage broker, look all over the country, look at all of these different places where you can potentially invest.
Yeah, definitely. And have you had any clients, well, you must have had any clients trying to buy within a limited company? What would you say are the pros and cons of doing it personally and then for a limited, would you say?
We get asked this question, I'd say, quite regularly. My first advice is make sure you know what your strategy is going forwards. For example, if your plan is only to have one buy-to-let property, you may not want to go for a company setup at all, because rates naturally are a bit higher within a company setup, and there's obviously additional cost to pay as well. So, for example, accountancy fees. So first, realign what your strategy is going forward. If your plan is to obviously increase and have a number of buy-to-let properties, get some proper tax advice from a qualified tax accountant of some sort, and they will tell you the pros and cons of having it within a personal setup or within a limited company. We direct, because we're not accountants at all, effectively, we'll say to our client, listen, before you do anything, go and speak to an accountant, go and speak to a tax advisor. Yeah.
We advise on the mortgage side, and certainly from a mortgage point of view, like Ginley says, a personal buy-to-let generally is a lower rate. So you've got rate advantages by going on a personal buy-to-let, but there may be better tax advantages by you putting it through your limited company. So, and that is the bit around strategy. know what you want to do, what's your goal. If you know your goal, then speak to the mortgage broker, speak to an accountant, and we can try and get that goal all aligned together then.
Yeah, definitely. That's good. And have you guys had any clients that maybe do stuff out of the extraordinary? So, for example, they're crypto investors, or their income is, maybe they trade currencies and it fluctuates a lot every month. How do you deal with clients like that, and what do you say to them in hopes of getting a mortgage?
So obviously, crypto's not doing so well at this present moment in time at all. Now, what you got to remember is that if there's a trend in the UK, lenders will probably be the last ones to catch on to it. With crypto, what we find in the last few months, the last 6 months or 12 months, ever since it's obviously gained in popularity, there's lenders that will potentially look at that sort of thing. However, there's a lot more due diligence essentially involved, because you've got to see, obviously, origination of funds, essentially, you know, where the money's come from, you know, who owns that money. So yeah, in terms of, I think it's at this present moment in time, lenders are still reviewing crypto. There's only a handful of lenders that will potentially consider it, but watch this space.
Extraordinary. I think we get so many clients that come to us, probably predominantly around bad credit, where they might have recently been made bankrupt, they've previously had a property repossessed, or they've got multiple CCJs, defaults, and like we've said before, you might have had just done silly things when you was a bit younger, and you feel like you're being punished for it, but there are options out there, and that's the thing, is speak to someone, because until you actually speak to them, you don't know what your options are, and it may not be that you can do it at that point, but at least if you know what you need to do to get yourself into the position to get a mortgage, then that's something for you to go away and work to. So just make sure you're speaking.
Yeah, and I believe there's a scheme for uni students where parents can buy a house for their child that's going to uni and then take equity out of their own house. Have you heard of that scheme?
There's various schemes like that out there. There's a couple of building society that will essentially do that, so they can buy it essentially as a buy-to-let, and the son or the daughter can actually remain in the property and rent out the other few rooms as well. But schemes are ever changing. I'd say.
That's nice. And what about gifting? How does that work in the sense of
what, bank of mum and dad?
Yeah, the bank of mum and dad. How does that work? What do you think about it? Should people take advantage, or
So at the end of the day, if mum and dad are prepared to obviously gift a deposit towards a mortgage transaction and get you on that ladder, yeah, absolutely. You know, take advantage essentially of that. Lenders are okay with it. In terms of gifts, how far it extends, well, it tends to be your mother, your father, grandma, granddad. Some lenders will take uncle and auntie. Some will even take actual friends, actually, as well. So yeah. Got to be a nice friend, I suppose, and I could do with some friends like that as well. But yeah, absolutely. It could be a portion of the deposit comes from them. It could be that the whole of the deposit essentially comes from them. But in the last few years, I'd probably say bank and mum and dad have been one of the biggest deposit contributors,
definitely,
in the UK.
But obviously, alongside their income also makes sense for the mortgage as well.
Yeah, obviously every mortgage application is affordability assessed, so it's not just about how much deposit you're putting down. A lender will still affordability assess to make sure that you can actually afford to pay that mortgage in your own right, but obviously deposit essentially helps.
Yeah, okay then. That makes sense. Okay, cool. And there was another question about can it work vice versa for a buy-to-let, or is it still more? Is that not a thing? In terms of gifting for a deposit.
Oh yeah, for a buy-to-let. Yeah, that's absolutely fine. Yeah, gift a deposit for a buy-to-let. Yeah, that's absolutely fine.
And what some people want to know, and this is more technical, you see when they're going through the bank statements. Let's say you have one bank account and you give it to them, but then let's say you have another bank account and you're doing your other stuff in there. Is that fine, or do they normally ask to check everything?
It depends what lenders you go to. So lenders generally, the accounts that they want to see are the ones that your wages go into, and also where your bills come out of. So if you're renting and you've got your gas, your electric, those sort of things. So as long as they can see that, then generally the lenders will ask as a minimum for those. When they're assessing your bank statements, if they can see regular transactions going to another account, they may ask to see that account, or they may ask what that account's used for. They won't always necessarily ask for it, but it is possible. Like Gindy said earlier, they sometimes do ask for more than 3 months bank statements if they need to go further back. So, but generally, most of the time they will want to see at least where your wages and your bills are going out.
The other thing is remembering that a bank account is classed as a credit agreement. So when lenders are credit search, they'll be able to see potential hidden bank accounts in the background.
Yeah, anyway, so they'll know anyway.
Yeah.
That's cool. Now, a lot of people in my audience, they may be looking at you guys thinking, yeah, it's cool, you guys help people get mortgages, but I want to be like you guys as well. So let's start off with the career. Is there anything unexpected you guys have seen in your career? What's the most extraordinary thing you might have seen on someone's accounts, or the maddest situation someone's approached you guys that wanted to get a mortgage? Is there anything crazy you lot have seen in your career?
God, we've seen so much, but you might not find it interesting, but we see it day to day, and we're like absolutely mad.
Gambling's a big. We see people that have obviously got into trouble with gambling. You see like £100, £200 a day, and you see loads of money coming in, loads of money going out. So gambling's probably a big one. There's
it's funny actually I had one on gambling actually as well. I had a client who's told me stop gambling. You need to stop, otherwise it's going to obviously affect your application. You're not going to be able to get a mortgage. Then we saw these transfers that were actually going out to someone, and I says, what's this that you're paying for here? He says, I'm paying for a holiday. We're going to go on holiday, it's a lad's holiday. I was like, okay. And then anyway, this guy, the money was getting transferred to, I end up arranging his mortgage. I asked him the same question, and he says, this is gambling money that I receive from this guy. So obviously you know what I did as a duty of care, to say, listen, I found out the real origin of these funds and what they're for. So
you just cancel the
application.
You see some bank statements with probably questionable transactions. So it might be that they've been up late at night one night and have probably been. But there's
that's actually a good thing actually. If you've got a partner and you're out laughing and joking, transferring him or her money, just make sure you're not putting a rude reference at all. It's embarrassing when you got to explain to the broker what that reference is.
That's some good tips. And so what would you say are the top 3 skills needed to become a mortgage broker?
For what we do, you've got to be understanding of everyone's situation and show some empathy. Ultimately, what we're here to do is we're here to obviously help people. Our mission has always been get as many people on the property ladder as possible, but get finance where others can't. You've got to be able to be good, understand the client situation, converse with that client, and if you can't find them a solution now, be determined to find them a solution within a certain time frame.
Definitely. Determination's massive, I think. You've got to be determined to want to help people. So I think there's a misconception as well about people have got to be good at numbers with mortgages. You haven't got to be good at numbers. I think that the most important thing is to just be able to talk to people, like he says, understand their situation. And do you know what there's so much information that we find from clients just by talking. Generally, when we first start an interview with a client, we just ask them really how we can help, and we just want to sort of almost like an open book and just tell us how we can help you and just listen to them. So I think being able to listen and understand people is probably a big thing, and just be conversational.
We enjoy what we do. I don't feel as I go to work at all. I love everything about my job. Every day, it's great. Speak to clients, and the best thing is when you get that mortgage approved and making that phone call, you know that you've actually played a part in changing someone's life. So, if that's what you enjoy doing, most definitely, yeah, it's a good career for you.
Yeah, and where would you say in terms of qualifications should one go for? What qualifications should one look for if they want to get involved?
So the qualification's called CMAP. It's made up of 3 individual modules. And you need to obviously study that, and obviously once you study that, say 40 hours of reading, you take an examination, and then you gain your CMAP qualification, which then gives you the license to provide mortgage advice. But essentially, you can be as book clever as much as possible. What I will probably say is try and get some experience, gain a passion for, even if it is just property, working at a local estate agent. Get some knowledge behind you, understand the house buying process. The problem that we see across the market, I'd probably say, is there's not enough companies that provide like trainee roles as such at all, but we're different. We provide trainee roles. We've had apprentices that have gone to administrators and then to brokers. So they've got a good sound backing of the house buying process. So yeah, have a passion for property, and there's so many resources available now. Whether watching your videos on TikTok, or there's so many YouTube tutorials out there. The resources that are available today is so much different to when me and Aaron became advisors.
There's different ways where you can take crash courses in CMAP, where you go to a company, you might get through it within a week or a month, but I think just make sure you take it at your own pace, and that you understand everything that you're doing. There's the 3 modules. I think the first module is just a general financial service industry module. It's not actually very mortgage specific. It's the second module which is more mortgage specific, but yeah, it's a great qualification to have under your belt. But I know we've got a couple of administrators currently at Create Finance where they're actually doing an apprenticeship within the CMAP. So they speak to a company called Simply Academy, and they basically give them the training that they need, and hopefully within the next 12 months they can move to a mortgage broker role. So it's good to have progression with companies as well, isn't it? So
yeah, definitely. No, that's good. And for Create Finance, are you guys offering any trainee roles or for the audience?
We're always on the lookout for people that want to start within the industry, ambitious people that want to roll the sleeves up and work hard. Absolutely.
Good people, talented people. Yeah. It doesn't matter how young or old you are. It's good to have these people in the business.
Absolutely. Right mindset. We can train everything else.
Yeah. Okay, that's smooth. And one thing I actually forgot to ask way back in the interview was simply just the cost of the services just for, to get a mortgage through Create Finance.
So it depends really. So it can, the complexity of the case. So we have a sort of a fee structure at Create Finance, a 5-tiered structure. It can be as little as £0 right the way up to £1,995. It is dependent on how complex your case is. So the more complex your case, the more time that's maybe involved in getting that application agreed. So we have to make sure that obviously we position that accordingly. So obviously we have a set terms of business. We're very transparent with clients before they start the mortgage process in terms of what fees that they are going to pay and why they would pay a certain fee. So it varies so much dependent on what clients we speak to.
Most of the time, if it's no complexity whatsoever at all, standard fees 495, which is pretty much similar across the UK, really.
Yeah, that makes sense. That's great. But no, it was good talking to you guys for sure.
Cheers.
You too.
A lot of gems given today for sure.
Thank you.
Thanks a lot.
Good, man. Guys, make sure you check out Create Finance. If you guys want to check the mortgage broker, they can sort anyone bad credit, self-employed, all sorts. So they can, as you can see from this interview, they're pretty knowledgeable people and they can help you take you on the right direction when it comes to...
Please follow us on Instagram as well.
Definitely. You see a lot of content on there. So I hope you check it out. Let's get it, guys. It's Poku Banks, baby.